Hello friends, welcome to our fifth episode of Iron and Steel Updates. As we enter into the festival months, the steel industry continues to get blessings of Goddess Lakshmi, and I should say a lot of blessings. Let us proceed to see how. The Indian steel makers are all set to reap rich profits as the steel prices rise above the pre-COVID levels. Prices have been shooting up for the last 4 months in line with the rise in the iron ore prices. However, big steel makers like Tata Steel, JSW, and ArcelorMittal, etc., who have captive iron ore mines, are largely unaffected by the rise in the raw material cost but are getting the benefits of the resultant price rise in the market. Since July this year, the steel prices are consistently moving up due to the pent-up demand in the domestic market, the high flat steel consumption of automobiles and consumer durable industries has helped in the rise in the domestic demand. Compared to the flat products, the sale of long product is less pronounced, but it is still good enough to prompt Tata Motors to agree to the price increase demand of the steel suppliers. Tata Motors has given a rise of Rs 4,750 per metric ton to its steel suppliers, and this increase shall be effected from the 1st of October. The steel suppliers were requesting for an increase of around 5,500 per metric ton since last 2 months. It may be noted that unlike commodity products in special and alloy steel segment, any price increase or decrease is decided as per the mutual agreement between the prominent steel makers and the OEMs. The good steel demand in China has pushed up the metal prices worldwide. This has also helped the Indian steel industry enormously, as the import-export scenario got reversed during the last quarter. Steel trade data released by China suggests demand remains strong there, with net steel exports declining a 10-year low in September 2020. Moreover, high sale of the passenger cars also confirms strong end-user demand for steel in China. The Chinese domestic steel prices are on the rise again post the national holidays that ended last week. The World Steel Association has adjusted its projections on the global steel demand dip to 2.4% for 2020 instead of a 6.4% dip which was projected earlier. In its short-range outlook, the WSA predicts that China's steel demand may grow over 8% over the last year, which is way higher than the earlier anticipated growth of only 1%. According to the report released on 15th October, the global steel demand will reach 1.73 billion tons, out of which China's consumption will account for 980 million tons. Taking a cue from the World Steel Association, the Moodys Investors Service has also revised its outlook for the global steel sector to stable on the back of the recovery in the demand worldwide. The agency had earlier cut the outlook for the global steel industry to negative. Moodys said it is changing steel outlook for all the regions, which include US, Europe, Russia, Brazil, and Asia, to stable. Moody's Senior Vice President Carol Cowan said that demand for steel is improving owing to resumption of the production in important end markets. Another factor contributing to the demand is that the construction sector, which is the largest consumer of the steel worldwide, has remained resilient throughout the pandemic and even picked up in the countries with infrastructure-focused stimulus programs such as China. He said that the operating conditions for the steelmakers are expected to continue to improve over the next 12 to 18 months, barring a resurgence of the coronavirus. Meanwhile, according to an Australian research, COVID-19 virus can survive on the glass, stainless steel, and other metallic surfaces for up to 28 days, much longer than the regular flu viruses. So we suggest you to take all the necessary precautions, sanitize all your metallic things well, wash the steel utensils properly, and do take care. Bye-bye.